going on, traders? It's Johnny here at Trader X. Thank you guys so much for tuning back into the channel. I really do appreciate your time and hope you guys are all able to end green today. But as you guys can tell from the thumbnail, today is going to be a different type of video, and the reason for that is unfortunately I was not able to day trade at all today. I know I mentioned in yesterday's video that I was going to be trading on a simulation account today, but unfortunately I got called into work early and knew I wasn't going to be able to be actively watching the market. So I decided it would be in my best interest to not take any trades at all. And so I wanted to instead take the time today to film a video to answer one of the questions that our subscribers asked in a previous video, which is what is the VWAP and how do you use the VWAP when it comes down to day trading. And so I want to go ahead and break that down for you guys right now. And so pretty much, to get into it, the VWAP stands for the volume weighted average price, right? And so for any of you who don't know, the volume weighted average price, what it pretty much is, it's a ratio of the cumulative share price to the cumulative volume over a given period of time, right? So for example, if any of you are familiar with Thinkorswim or aren't familiar with this platform, in order to actually add the VWAP, right, I'm going to go ahead and show you guys how to add it and then how it's used to day trade. And so let me just go ahead and pull up a new chart so that I can set it up from scratch. So I'm going to pull up a random stock like Tesla, or let me go ahead and actually pull up the Nasdaq future since I have it pulled up here. And so what you need to do is go to your studies, right? And click edit studies. And then if you just type in VWAP over here, you'll see it pop up, right? And then I'm going to go ahead and apply that. And then pretty much, yeah, I'm going to show you guys exactly what it does, right? So let me zoom in on the time frame. What you guys will notice, right, is that now, right, this chart is starting to look a bit like this one, right? And so that's how you pretty much set it up and add the VWAP, but I'm going to go ahead and take this chart off. And so the way it's pretty much used primarily is it's obviously just an indicator, right? So when it comes down to using indicators, it can definitely become, I would say, counterintuitive, only because of the fact that some people rely too heavily when it comes down to using the indicators, right? And what you always want to remind yourself is that when it comes down to day trading, you should never ever take a trade solely based off an indicator, right? Just because something is telling you that, it's overbought or oversold doesn't mean that it's actually going to play out the way you think it is, right? Just because of what the indicator is saying. And so let me go ahead and, get into depth more of what exactly I mean. And so the VWAP itself, right? It's primarily composed of these three lines, right? So it's pretty much, as I mentioned, a cumulative share price, or a ratio of the cumulative share price to the cumulative volume traded over a given period of time. And so what you'll notice is that, these three lines here, this top line, this red one here, is referred to as the top VWAP, the purple one is referred to as the middle VWAP, and this yellow one is referred to as the bottom VWAP, right? And so as I mentioned, right, when you go to the edit studies and you go ahead and add the VWAP, what you can actually do is change the color, right? So of the upper band or the lower band. So I have mine set at the default ones, and so ultimately it doesn't actually have to be these colors, right? It's more primarily focusing on the big idea of what it is. And so the VWAPs are pretty much used to help indicate when something is uptrending or downtrending. And what do I mean by that exactly? Well, if you take a look at the chart here, what you'll notice is that pre-market, the Nasdaq future was indicating signs of an uptrend, right? And how do we know this? Well, it was trading between the middle VWAP and the top VWAP. And whenever something's uptrending, right, it's primarily said to be trading between the middle VWAP and top VWAP, and vice versa. So when something is said to be downtrending, it's primarily trading between the middle VWAP and the bottom VWAP. And so as you guys will notice, right at market open, right, the Nasdaq pulled on back to the middle VWAP and bounced, right? So all of pre-market, it was indicating signs of an uptrend. So as the market opened, it ended up bouncing off the middle VWAP and making these higher highs and higher lows on the day, right? It was making, or it was technically considered uptrending because of the fact that it was trading between the middle VWAP and top VWAP. And what you guys will notice is that it's a pretty good tool because of the fact that, it's not just like, it's a bit more bigger picture, right? And what I mean by that is, as this thing's moving up, right, it's obviously trading between these two levels, right? Between the top VWAP and middle VWAP. And so what that's telling me is that, it's indicating signs of an uptrend, it's indicating signs of growth, and therefore it'd probably be in my best interest to focus on something like TQQQ, right? And so as you guys will notice, TQQQ, right, correlates with the NASDAQ, and this one was doing exactly the same thing as well. It was trading between the middle VWAP and top VWAP all throughout the day, right? And so, as I mentioned, you never want to take a trade solely based off these indicators, and the reason for that is they are never accurate 100% of the time, right? So what I mean by that is, for example, if we take a look at the previous past 5 days of the NASDAQ, what you'll notice is, it can switch often in terms of direction, right? Direction could change very quickly when it comes down to using the VWAP, so it's not, a guaranteed indicator, right? There is no such thing as like a perfect indicator. And so what you guys will notice is, for example, this is actually how I lost money heading into yesterday. So as the NASDAQ opened and started to sell off, right? To me, this was indicating signs of a downtrend because it was trading between the middle VWAP and bottom VWAP. But this thing ultimately found a support, right? Shot all the way back up to the middle VWAP. And, you could ask yourself, well, this thing was selling off and trading between the middle and bottom VWAP all pre-market, right? So therefore, when this thing approaches the middle VWAP, it's going to get rejected again, right? Well, as you guys can see, right, that it actually ultimately was not the case at all. So it actually broke above the middle VWAP, pulled on back, and then broke below the middle VWAP, and then pushed back up and broke above it again, right? And then ultimately continued to soar. And then it would pretty much change directions a lot throughout the day, right? So that's pretty much what I mean by it's not a perfect indicator, right? So the market itself can change directions very quickly. And so the VWAP should be used as a reference, but never as like a final decision to actually buy into a stock. And so to better get into depth of how the VWAP is also used, right? You guys will notice that, oh, well, actually, let me go over here. So for the settings I had right on it, what you guys will see is, what you guys may ask is, why do you have it set at the deviation, right, down and up of 2? Well, if you look at what the deviation is, it's really the number of deviations defining the distance between the VWAP and the either lower or upper band, right? And so the reason why I have it set at 2 is because I felt that at, setting it at those deviation levels, it acts as a pretty good, reference for how the market is trading, especially like today, for example, this thing pulled onto the middle VWAP and then continued to uptrend, right? It was trading between the middle top VWAP, indicating signs of growth, indicating signs of an uptrend. Now, you may ask yourself, what exactly happens if you change that up? Well, let me go ahead and show you, right? So if you go to the VWAP itself study and you set it to something, crazy higher, for example, like 8.0, oh, I don't know where that came up. So for example, minus 8.0. And then, you set this one to 8.0 as well, right? And then let's apply it. So I want you guys to see the change. So this is how it looks like now, set at 2 deviation levels. And this is at 8. So as you guys can tell, the distance between the top and middle VWAP changes drastically. And not only that, it's not really the best reference in terms of, bigger picture how it was trading. It just makes the NASDAQ, in my opinion, seem, like it's just not the clearest for me. That's why I like the two standard deviations up and down, right? You guys will notice it looks completely different when you change up that setting. And if we do the exact opposite, right? So let me go ahead to the and change the VWAP to something really small. So for example, something like 0.5. So 0.5. And then I'll do the deviation on the top also as 0.5. Right? So this thing is not accurately representing where the NASDAQ or how it's trading, right? This thing has been actively trading above the top VWAP, right? So it's not really a good reference. That's what I mean by the 2 standard deviations is what I personally like to use because of the fact that I think it acts as a good reference point, right? For when something is indicating signs of an uptrend or downtrend. So as you guys will see, right, let me go ahead and change it back to what it was. Right, so let me go back into the settings here. Let me go 2.0 or minus 2.0 on the top, right? And then on the bottom here. So I went ahead and applied that and boom. See, what you guys will notice is it just looks a lot better in my opinion. It could be different for you guys, right? That's why you guys can feel free to change the standard deviation level on your settings. But I personally really like this setting and, I find it a lot easier to read. But that's pretty much ultimately how you would use a VWAP, right? So they're there to be used as a reference point of when something is uptrending or downtrending, right? And as you guys will notice too, when you change the time frame, right, the VWAPs themselves, they kind of almost change up a bit too. And what you'll notice is it's kind of like that for other trading signals too as well, or indicators, is when you change the time frame, it starts to change up a bit how it's actually reacting. And so I feel like it did a good job of holding on the 1 day 1 minute in terms of accurately reflecting, when something was overbought or oversold. And so for example, today, as this thing approached the top VWAP, it would sell off, right? It would approach the top VWAP and sell off to middle VWAP, as we saw here. So anytime it would really touch the top VWAP, it would experience some form of resistance. Now today, the resistance may not have lasted for very long, right? It would ultimately make a higher high, but it did ultimately, anytime it touched the top VWAP, act as a resistance level, and so that's why it can be useful, right? So if you're in TQQQ, for example, and you're riding this thing up, when it gets closer to top VWAP, that may be indicating to you that, hey, it's not really, it hasn't really been holding the best as it approaches top VWAP pre-market. So, there's a chance I may just want to get out and then end up, waiting for this thing to sell off before I decide to get back in and ride it up higher, right? So as this thing ended up selling off after touching top VWAP, what you guys will notice is, right, it pushed up and got rejected again. Now, it didn't actually end up touching the top VWAP again, right? But you guys get the point in terms of how it can be used. And so, yeah, that's pretty much everything I wanted to break down today in terms of how to use this indicator. Just please, a big reminder again that use the indicators only as references, never as a sole reason to get into a trade, right? You should never buy into a trade just because of the fact that you think the indicator is telling you one thing. Because let me just tell you from experience, the indicators do not work perfectly, not even close to perfect, right? There is no such thing as a perfect indicator. You're just using it there as a reference to help guide you with your trading. But thank you guys so much for your time today. I hope I did a good job of explaining it. If you guys have any questions at all still, just go ahead and drop a comment and I'll, go ahead and answer that for you guys. And also, if you guys want me to break down any other indicators that I use, primarily the MACD or RSI, for example, they're also great indicators. So I would, be more than happy to go ahead and make a video for you guys explaining that. Yeah, just go ahead and let me know in the comments, if that's something you guys would find value in. But I do appreciate your guys' time again, and I really do hope you guys, enjoy your weekend. Thank you guys so much, and on Monday we will be posting another recap, so we will see you guys then. Take care.